Hello everybody. Welcome to my channel, where I share with you some of the best investing tips and insights from the world's most successful investors. Do you want to learn how to invest for 2024 and beyond from one of the most successful investors in the world? Do you want to know what Ray Dalio, the founder of the world's largest hedge fund, thinks about the current and future state of the global economy and financial markets? Do you want to discover some of the tips and strategies that he uses to achieve consistent and extraordinary returns? If you answered yes to any of these questions, then you are in the right place. In this video, I will share with you some of the new investing advice from Ray Dalio, one of the most successful investors in the world and the founder of the world's largest hedge fund, Bridgewater Associates. Dalio recently gave his insights on how to invest for 2024 and beyond at the Milken Institute Asia Summit in Singapore. You will learn how to avoid cash, think in terms of liquidity, diversify your portfolio well, be flexible and adaptable, and more. So, stay tuned and watch this video till the end. Now, let's get started. Ray Dalio is known for his unique investment philosophy and approach, which he calls the principles-based approach. He believes that by understanding the fundamental principles of how the world works, investors can make better decisions and achieve better results. He also believes that by using a systematic and scientific method, investors can reduce their biases and emotions, and increase their objectivity and rationality. Dalio has been investing for more than 50 years, and he has seen many market cycles and crises. He has also learned many lessons and strategies that have helped him achieve consistent and extraordinary returns. He has shared some of his wisdom and knowledge in his books, such as Principles or The Changing World Order, as well as in his articles, interviews, and videos. In this video, I will focus on some of the tips he gave at the Milken Institute Asia Summit in Singapore, where he talked about how to invest for 2024 and beyond. He said that the world is facing a major paradigm shift, which will have significant implications for investors. He said that investors need to be prepared for the challenges and opportunities that will arise in the next few years. Here are some of the main points he made. Avoid cash, as it is the worst investment. Dalio warned that cash is eaten away by inflation, which is likely to rise in the coming years due to the massive money printing and debt accumulation by governments and central banks. He said that cash is a very bad asset class and that investors should diversify their portfolios with other assets that can preserve or increase their purchasing power. Think in terms of liquidity, not wealth. Dalio explained that liquidity is the ability to buy what you want, when you want it, without being subject to the whims of others. He said that liquidity is depreciating, as more money is chasing fewer goods and services, and as geopolitical tensions and conflicts are increasing. He advised investors to think about how they can protect their liquidity in a world where there are more restrictions and controls on capital flows. Diversify your portfolio well. Dalio said that diversification is important for reducing risk and increasing returns, but he also warned against over-diversification, which can dilute performance and increase costs. He said that investors should own a number of assets that they are confident in and can monitor closely, rather than own hundreds of assets that they know little about or have no conviction in. He also said that investors should diversify across different sectors, industries, geographies, and asset classes such as stocks, bonds, commodities, real estate, and cryptocurrencies. Be flexible and adaptable. Dalio said that the world is changing rapidly, and that investors need to be flexible and adaptable to cope with the uncertainties and opportunities that arise. He said that investors should not be attached to their opinions or beliefs, but rather be open-minded and willing to learn from others. He also said that investors should not be influenced by emotions or biases, but rather follow their own judgment and analysis. He said that investors should have a clear investment plan and strategy, but also be ready to adjust it when the situation changes. After an incredible start and run in 2023, Dalio has issued a warning that U.S. equities appear to be getting more and more pricey. America is facing serious political and economic threats, which are made worse by rising interest rates, according to Dalio. The renowned investor claims that a dangerous situation is also being created by internal conflicts and foreign threats. Notwithstanding his pessimism over the U.S. market future, Dalio continues to be actively involved, placing large bets on services businesses. Bridgewater's portfolio also includes substantial holdings in consumer goods and healthcare stocks. The Bridgewater Associates investing business, led by Ray Dalio, is most known for its approach of diversifying holdings across multiple industries. Although the fund's primary focus is on large tech businesses, Dalio's track record with small-cap equities is impressive. Dalio's small-cap stock selections beat the S&P 500 index by 2.5% year between 2006 and 2018. In addition, Dalio has gained notoriety for selecting some of the top small-cap stocks that have beaten the market as a whole. Based on the consistent returns over the last 3 years, his bets on Lancaster Colony Corporation, Hostess Brands Incorporated, Evolent Health Incorporated, and Merit Medical Systems Incorporated have proved to be quite successful. He thinks that investors should invest primarily in asset classes that are creating new technologies. Several of its top holdings are blue-chip stocks that you might not necessarily view as disruptive. However, Bridgewater has significant stakes in Google parent Alphabet, Meta Platforms, and Intuitive Surgical. Following the global success of OpenAI's ChatGPT generative AI program, several investors appeared to write Alphabet off. However, the business bounced back with its own advances in artificial intelligence, AI, and is currently developing a generative AI model that is purportedly more potent than ChatGPT. In the fields of quantum computing and self-driving car technologies, Alphabet is also a leading innovator. Another pioneer in AI, Meta is releasing some of its technologies under an open-source license. The business is also making significant bets on the metaverse and virtual reality. The field of robotic surgical systems was pioneered by Intuitive Surgical. In that market, the corporation is still the 800-pound gorilla. As aging populations increase the need for additional surgical procedures and as technology advances broaden the range of procedures that can be carried out with robotic aid, it should be able to continue growing. So what does Dalio think investors should avoid? Bonds. When asked about how he would personally invest in today's environment, he replied, "I don't want to own debt, bonds and those kinds of things." In the not-too-distant future, though, wouldn't falling interest rates lead to rising bond prices? Sure. But Dalio is viewing the world more broadly, particularly when it comes to the growing problem of global debt. He said, "I personally believe that the bonds longer term are not a good investment." These are some of the tips from Ray Dalio on how to invest for 2024 and beyond. Remember to apply these principles with a long-term perspective and stay focused on your investment goals. Thank you all for watching. If you found this video valuable, give it a thumbs up and share it with your friends. And don't forget to subscribe to our channel for more insightful content. Until next time, happy investing!